But we cannot hear you.
You cannot hear me.
Yeah, very, very low.
Very low.
Yeah, I can't hear either. You're very low.
Let me see what could have happened. I use the same thing today. No problem. Mm, yeah. Is that better?
Much better,
That's
yes.
better.
Yeah. Okay. Very good. Okay. Thank you for warning me.
Yeah, it's good now. Yeah.
Okay. Okay. Who know what had changed, but okay. I hope I fix it. Okay. Thank you very much. Very well. So okay. So quickly again to summarize, remember the three sections of the course. First, the link between social protection and PFM. Then the budgeting section, which was done mainly by UNICEF and the European Union. And now we are working on the financing part. The financing part is mainly based on the fiscal space handbook done by United Nations Women and the ILO, and it has 8 options, and we have been exploring some of them. So I will share the presentation. Yeah. And then, so everybody can see the presentation. Okay, good. Thank you.
Yes, we can see it.
Perfect. So today's session, session 7, is on domestic resource mobilization. I will not cover all DRM option. I will cover the 2 of the main one. To remind the process, remember we were discussing how do you reform a policy, and particularly how do you reform social protection policy. And again, social protection is something that is designed for the long term, so you should always be able to develop it through social dialogue, capacity building. It would be very unwise to try to force social protection on a society. Social protection also has the tripartite structure, natural tripartite structure, become very often employer puts some money on it, worker puts some money on it, and government is also involved. So the capacity building of all stakeholders is really important, and that's where this process comes in. The first, making an inventory. For that, we have tools like the Social Security Inquiry. Second, identifying and estimating coverage gap, which can be done within the ABND, the Assessment-Based National Dialogue tool. Then the costing analysis, which can be done through the rapid assessment protocol costing tool. Then we have the 4th and 5th step, which can be done in parallel. They are not sequential. Fiscal space analysis, which is based on the handbook on fiscal space, and the poverty impact assessment, for which there is also a tool some of you saw with Nanya last week. Then again, within the fiscal space, we have discussed that there are 8 options. This is a much wider portfolio of options than if you go look at the definition of fiscal pay, for instance, at IMF. Right, we have different definition, ILO and IMF. And I'm a big believer that this wider set of options, even if in the end you don't use all of them, or maybe only 1 or 2 of them, it is much better for the process of analysis, of realizing why you should choose one over the other. So, as you can see from the list, the first 2 are the one we will cover today. We will discuss the expansion of coverage of contributory social security and the increase in taxation. There are 4 that you will see with Helmut today from now on Wednesday: elimination of illicit financial flow, increasing efficiency of public expenditure, but more than that, the reprioritization of public expenditure using fiscal and foreign exchange reserve, and finally an increase on official development assistance and other forms of foreign aid. So far you will see with Helmut also a little bit of tax revenue with Helmut, but the number 6 and number 7 we have seen last week, the restructuration of debt and the adoption of a more flexible macro frame. So, since we will focus on social security and tax revenue, let's try to think a bit why we often stress the need for domestic capacity building, domestic revenue building, and I really like this graph. I first saw it in a presentation by Professor Emmanuel Saez at the beginning of the year, and he said it was based on a book by Piketty. Emmanuel Saez and Thomas Piketty have worked a lot together. It's very impressive to me. It was a very eye-opening to me because I often thought that for countries to become wealthier over time, they will need ever more investment in infrastructure. And it turned out that is not the case. If you look at the graph, way back in 1900, 1910, European countries were already spending 8% of GDP in infrastructure, what they call here in gray regalian public goods. So they were spending in defense, law and order, administration, and infrastructure. And today, how much they spend? 10%. So that a very small change over more than 100 years, only from 8% to 10%. So why is the state in Europe so big? By state we mean Germany, France, Britain, and Sweden. It turned out that the real growth of the state during this 100 years was very focused on education and social protection and social spending in general. So this is very interesting because as you can see, especially from 1910 to 1980, the state over 70 grew, the state grew and grew, but not on regalian public goods, but rather on social state goods. And this for me yields two very interesting lessons. The first interesting lesson is we can be patient. If Europe took 70 years building its social state, then we have to be patient with countries. Like you cannot build a social state in a single day. It takes a long time. But the second lesson is a strong state, a wealthy society has or needs a very strong role of the social protection of the state, and not so much of infrastructure or other public good provision. So this is, to me, really exciting in the sense that honestly I had not understood until January when I saw this, to what extent the big state in developed countries are basically social protection state. Small state, in the sense of having a small role for government, are mostly the provider of regalian public goods. So, any questions up to here? Okay, go ahead, Bob.
I'm just curious, Ramos, if you look at the numbers, 47%, do you have an idea of what accounts for the 53%? This is everything else, education, health, or I see healthcare is included here. And I'm just wondering what then accounts for the 53%.
For 53.
No, this is national income or national budget? Maybe I miss.
Oh, this is national income, yes.
Oh, this is like GDP. All right.
Just so just like GDP, just so.
Yes, sorry.
Okay, just sorry. So what we're looking at here, very good question, Bob. Thank you. So basically, what we are looking at here is that 100 years ago, the overall expenditure of the state as part of national income was less than 10%, even in the core of Europe, Germany, France, Britain, Sweden. And now it is almost 50% of national income. So this is, and the question is what grew? So if you had asked me before looking at the graph, I would have thought, well, infrastructure might have grown a lot or that sort of thing. And it turned out no, that infrastructure never grew that much. What grew a lot was healthcare, education, retirement, and cash social transfer and other social spending. So when you look at this, you realize that the real big role of the state, and maybe I should give you a bit more context of the particular graph now that you asked me the question. Basically, what was science trying to point toward was to explain to what extent all these decisions are social decisions, not personal decisions. So he was trying to explain, look, when people say they want to retire at a given age, like to take their pension, that always a social decision. Of course, there are more variation, but if a country say everybody can go at 60 years, then most people decide to retire at 60. If a society say everybody can go at 65, then most people retire at 65. And it is pretty amazing to what extent the entire society move according to this social decision. And he said it is the same for education and for everything else. For internet education, if a society say now it is mandatory to be at least until 15 years old, then people stay until 15 years old. And if it is mandatory to stay until 17, then people stay until 17. And yes, of course, there are people who live a bit earlier, but the big mass of people basically do what the state end up deciding is the good equilibrium for that society. So for retirement, for health, for education. So that was more or less his point where because those decisions tend to be so social, so the role of the state is extremely important. Would that answer your question, Bob? Yeah, Wanya?
Yes, thank you, Alvaro. I wanted to ask, if you look at most developing countries, either in Africa or maybe in Latin America, would we see a similar pattern in terms of this kind of distribution amongst the different needs that we have in this graph?
Yes, that's an excellent question. My general impression is that yes, maybe not such a steady increase over time, but in general, it seems that the pattern is the same for most countries. If you allow me, I will move to the next slide. So here we are focusing on taxation, but if you look at government revenue, you will see that for high income at the OECD, the average is having 41% of income of GDP as government revenue, and for low income it is 20%. So this fit a lot with this story. If we go back, the baseline state, like the state that provides the minimum it has to provide will be around 10%, 12%. And when the state start providing extremely basic education and health, then it goes up to about 15%, 20%. And when it really wants to start the machinery of protecting vulnerable people over the life cycle, then you start growing from 25 to 40% or more, which is what we are seeing here. Low income country, about 20%. Middle income country, around 30%. High income countries, about 40%. So it does seem that there is a pattern where the state is building its structure over time, and as GDP increases, a bit the question, and I'm sure some of you are thinking about that, is what is the causation? Like, do you get wealthy first and then you build the state, or when you build the state, you get wealthier as a country? Good question. It is not a simple answer. To some extent, I'm a big believer that you build the institution first, and then the wealth starts flowing naturally. People feel healthier, stronger, but we will say a bit more of that during the presentation. Does that answer your question, Wenja?
Yes, thank you.
Okay, of course, you're welcome. So I will go a bit quickly over this. In any case, you will have the presentation. So when we discuss taxation, why is it so important? Because when you look at other options, I tend to think of other options mostly like seed money, like initial money. Let's go back, for instance, to rearrangement of debt. So we say that when debt is renegotiated, you may find some fiscal space, but typically the extra fiscal space you find is not going to be a very large amount. Like as I mentioned before, let's say a country managed to decrease the debt service from like 100 point or 200 point, and so now it is able to pay 1% of GDP less. But you can see easily from this table that the difference between a low income and a high income in terms of government revenue is not 1 or 2 points of GDP, it's 20 points of GDP. Right, so those very large difference are very hard to build with the smaller changes that you can achieve using a more accommodating macro framework, illicit flows, the, how do you call this? Helmut will talk more about that, but the other option, some of them are very one-off option. Like you will get some money for a while that can help you build the institution, but you have to think it at some point you will really, really need domestic resource mobilization through taxation and through social security contribution. So, as we were saying, the high income countries almost always have a much higher tax to GDP ratio than lower income countries. Also, another significant difference is that income taxes are much more important in developed countries, and indirect taxes such as the VAT, the value added tax, are more important in developing countries. So let's see what is that about. So when we think of fiscal space option and type of tax, you end up with a big list. I don't find big list easy to memorize. If you or to remember, more than memorize sounds like I'm going to give you an example. No, just that you remember. How do I remember always the big chunk of taxes? Let me go back to when we were discussing debt. You may remember we were talking about flows and stocks. So stock is asset and liabilities, and flows are revenues and expenditure. So with taxation, I think of it very similarly. So you can have a big chunk of taxes that is on stock, and in this case it would be on wealth. So you could have taxes on wealth. There are many types of wealth and many types of wealth taxes, but the big chunk is wealth. You can tax wealth. Then the second big chunk is income, right? So there are many types of income, many types of income taxes, but here the big chunk is the notion of the flow of money as opposed to a stock of resources. Then that would be income taxes. And finally, consumption taxes, which are sort of a tax on expenditure. So that those are the big three chunks. There are some taxes that don't fit easily in any of these three categories, but so that you have an easier time in the future: wealth, income, and consumption. So looking at that, then we can think of income taxes. They can be divided mainly in personal income taxes of the person, of the final beneficiary, and corporate income taxes. So I believe that sometimes people tend to think that you really should tax very hard corporation. And it makes sense in some context, but if you are careful about it, the problem is not so much whether a corporation has more money or less money, but who exactly ends up receiving that money at the end. So sometimes corporations are public and they have many, many, many owners. And sometimes a corporation is private and it has only a few owners. Or even within a many owner situation, some of the owners have a lot of money. So for me, it is always a bit complicated, the topic of corporate taxes, because let's think about you and your pension fund. So you save your money in a pension fund, and the pension fund has to invest somewhere. So let's say, for the purposes of this discussion, that it saves the money on it invests on Apple, the phone company. And so now you as a pensioner will own a little bit of Apple. So anytime I tax corporate income taxes on Apple, then I take a bit of your money. So maybe that's a good idea, maybe not, but then it is not so obvious who am I taxing. But then if someone owns a lot of Apple stock, so it is that person is a very wealthy person that has a lot of Apple stock. Then if I tax on Apple, then this person is paying the same percentage of taxes as you, and maybe you own only a little bit of Apple. So that's the problem I have with corporate income tax, as opposed to personal income. As far as I'm concerned, personal income can be extremely high, and it doesn't matter, because if you are very, very wealthy, then pay a lot and you are going to be fine. I'm using here the word very wealthy a bit carelessly. I will be more careful, because we are talking about taxes. In this case, actually, if you are a very high income person, which is not exactly the same as being very wealthy, albeit usually at very high level, the two things tend to be almost the same. So basically, just to be careful of thinking of when you want to tax a lot corporation, it makes sense up to a point, but you have to be careful not to end up being unfair to many small saver, pensioner, that sort of profile, that are not necessarily wealthy, and they were receiving income from corporate income, from like dividend. So anyway, then within wealth has been very difficult to tax, but there are very popular wealth taxes, such as land taxes, building taxes, inheritance taxes. The other taxes are harder to use. I will explain in a few minutes why. Then you have taxing natural resource extraction. This is always a bit more complicated because of the arrangement you have to make with the company that is extracting the natural resource. Then you have what we could call innovative taxes, such as sin taxes, which are behavior that are not illegal, but that people find maybe undesirable. So like consumption of alcohol, consumption of tobacco, so you put high taxes on this. And also this kind of sin tax can be combined with negative externality tax. For instance, the carbon tax, which are supposed to reduce pollution, contamination. So these sort of taxes are more innovative. So you can do those. There are tariff. Tariff sometimes can be on import, sometimes on export. Export are very few nowadays. Import have been discouraged by the commerce, by modern commerce, like everybody signing free trade agreement, and you have all these free trade organization. It is hard to promote tariff, and they are often done in such a way that they end up hurting more the middle class and poor people than high income people. And finally, there is consumption and value added taxes, which are very uncomfortable in the sense that they are very good for generating a lot of income and resource, but at the same time, they by structure they tend to be what we call regressive, right? The regressive tax is this notion that the poor end up paying more of their income on these taxes than the richer people. And this is in general true when you are doing a very broad-based consumption tax, because usually poorer people consume a lot of their income, while richer people consume part of their income and they save some of the income. So if savings are not taxed but consumption is taxed, then more of the income of poorer people will end up being taxed. That's why people are a bit uncomfortable with value-added tax, but the value-added tax has become extremely important in almost all countries because it generates a lot of resources. However, if you have very high inequality or a lot of poverty, then maybe government should be a bit careful on how they plan to implement the VAT, possibly with the exception of luxury items or services. And of course, they should encourage as much as possible progressive taxation such as income, corporate taxes, and wealth taxes. So those are much more progressive because you often can build them in such a way that as you are wealthier or have higher income, you pay more not only in absolute term, but also as part of your overall level of income, as the percentage, the rate. So what is the problem with the discussion of taxation as a fiscal-based source? Taxation is very famous, very notorious for having large change or large difference in the impact they might have on people according to how it is exactly described in law and norm. So this is, I had the experience of working at the Ministry of Finance, and it was really fascinating to see how people learn to, like abuse the code, to not pay as much as they should, and other people end up being hurt by the way the code was designed. So let's think a bit about the proposal that will be often in the table. So sometimes what will be on the table is let's do a VAT reform, a value-added reform. The problem with value-added taxation reform is that it can actually be about three different type of reform. First type, basically an increase in the rate. So maybe a country has a 10% VAT and it's thinking, okay, we need more resources, so let's increase it to 12% instead of 10%. So that's a pure rate change, and it will often create some extra income. It is difficult that it will not. The second big type of reform in VAT reform is increasing the taxable base. So one typical example is that services were not very important in the past, but we were very focused on goods, like buying a TV as opposed to going to the a big TV, like to watch TV, as opposed to going to the doctor. So it turned out that going to the doctor is something that had become relatively more expensive to TVs. And you all know too, like in the past, getting a really nice TV was incredibly expensive, and now it is much cheaper. And so if you focus your taxes on goods have been getting relatively cheaper, and they are smaller as a part of GDP in most countries. Intel services, private doctor, private education, accountant, lawyer, engineers, architect, all you can think about, mostly professional services, but also non-professional services. They all have increased a lot in relative price. If you are very interested in this topic, it has a name. It is called the Dutch sickness, or Baumol. Sorry, not Dutch sickness. The Baumol cost problem. So the Baumol cost problem is creating this big discrepancy in the behavior of the cost of services and the behavior of goods. So many VAT reform, for instance, when I say luxury goods, then people were thinking of TVs. But now think about it. What do you think is more expensive today? Buying a TV or going several times to watch, I don't know, like a soccer match at the stadium? So in the past, TVs were much more expensive than going to the stadium. Now, going to the stadium is much more expensive than watching TV. So, or buying a TV and watching it many times, many soccer game. So there have been a big change in the relative price everywhere, all over the world. So VAT can be about, for instance, before we were taxing a luxury good called TV. Now it turned out that the real luxury expenditure is paying doctors, paying private education, paying private, in general, services. So, and the third type of reform, besides making a broader base, assuming that there are things that are not covered by the VAT right now, the third big change is changing the nature of the tax itself. And what does that mean? The old style of VAT was the sales tax. So the typical example is, think of a farmer that plants wheat, then sells the wheat to a miller. The miller pays taxes on sales tax to the farmer. Then the miller creates flour. Then the baker takes the flour and pays taxes on the flour, and then creates bread, and then sells the bread to final consumer, and the consumer pays taxes. So there are two ways this could go. If the sales tax was a pure sales tax, then the bread will be paying taxes 3 times. And each time it will be full tax and it cannot be deducted. If it is VAT, then the baker can deduct the sales tax it paid to the miller. The miller can deduct the sales tax it paid to the farmer, and the farmer can deduct whatever sales tax it paid on, I don't know, fertilizer or something like that. So the idea is that you begin having a lot of traceability because the tax administration will now know who pay what to whom, and so how much income each one of these people is receiving. Because naturally, for if you are thinking about it, sales tax were generating more money directly, but then it was creating an incentive to not declare sales tax and to hide as much as possible. Instead, with VAT, everybody has an incentive to ask for tax receipt because otherwise they cannot deduct their own tax receipt. So this is the third kind of reform. You might say, well, why are deductions so important? Basically because they allow you to know income, and income is the next big detail of taxation you have to think about. One, what is the jurisdiction of the income you are going to make people pay taxes on? So, for example, the United States has worldwide income. It doesn't matter where you live in the world. If you are a United States citizen, you have to pay taxes in the United States. Whereas most countries pay taxes on you pay taxes on the income you have generated in the country. Then another really important issue is how do you treat multiple income flows? So this is the following idea. Let's imagine you are a doctor and you have high income, you have a high salary because your hospital pays you very well. But besides your high salary, you also have, because you have earned a lot of money, you now own several houses and you rent them. So you receive money from rental income, and also you have investment on the bank, and the bank pays you interest rate and dividend. So you are having three different income flow. Let's stop there. So three different income flow. You have the salary, you have the rental income, and you have the interest rate on your investment. So a lot of the personal details of income tax is, well, are you treating all this income as one single thing, as one single income, which for very wealthy people might mean crossing very high threshold and paying more? And or are you treating each of these separately? So sometimes you can be a high income doctor but the rental income is not very high. But if you are treating them separately, then the the rental income might end up paying zero because maybe it is very little. But if it were added to your salary and to your investment, then you would have to pay a significant percentage. So that the way it make a big difference on how fragmented is the treatment of multiple income flow. And in recent years, we have realized, at least the people who studied this issue, that passive capital gain really have to be taxed. So they have been a source of enormous changes in wealth for a lot of people. And you might think, well, but why do you want to charge that, or what is it exactly? So let's think about a house. You own a house and the house is increasing in value, and then many years later your house is worth much more than at the beginning, and so you now are wealthier. But typically these kind of capital gains are not paying taxes. Even if it is a kind of income, and the argument is you don't need to tax it because if you ever sell the house, to continue with the house example, if you ever sell the house, then you will pay taxes on the higher value of the house. And same thing with other kinds of capital gain, that as soon as you liquidate or sell whatever asset has gained in value, then you will end up paying taxes at that point in time. The problem is that we now know that very wealthy people are able to play an financial management game where they never sell appreciating asset. What they do is basically ask for loan on the asset gain. So, and of course, the bank is always going to give them the loan because it knows that the person is always going to be able to pay. But then the wealth allows this person to have access to more financing, and then the person never has to pay taxes because technically it had never liquidated. So now we have, even if it is not the best way to do it, a lot of us now think that it is important to consider taxation on passive capital gain, because clearly not taxing it has opened up this entire how do you call it, financial shielding structure. Then, of course, there is the small print, which would take forever to discuss, depreciation rule, and allowable cost deduction. So my favorite example in this is back in my home country, we have the different in taxation level at a certain sell point. So some of the firm would pay 10% in taxes, the other firm would pay 20% in net income corporate taxes. And it turned out that you would think that if you are paying double on net income, then in theory you should at the very least be paying twice as much relative to the 10%. But it turned out that they were paying basically the same, and you will in percentage. And you will like, how is that possible? It is basically because of cost deduction. So think about one firm selling 100 and it has to pay 10%, and the other firm is selling 100 and it pays 20% on net income. So remember, this is they are selling 100 but of gross income, and you have to deduct cost. So what happened? The people that pay 10% will say my costs are 90%. So from 100 subtract 90, you end up with 10. And from that 10, you pay 10%. So that 1% of gross income. And then you think about the other people, the ones that pay 20% of net income, they would just say, you know what, my costs are 90%. So probably 95%. So I only have 5% of net income, and I will pay 20% on the 5%, which is again 1%. So you can see that the two firms were paying in theory different rate, but as long as they are able to play around with depreciation rule, allowable deduction here, financial planning there, then they all end up paying more or less the same. So it was very clearly a game of, like, I will pay you a little bit, so I'm not very obvious that I'm cheating, but they were all clearly playing, maybe not illegally, but they were clearly making a very aggressive financial planning that possibly, if you study it very carefully, you could have found a legal move. But it means spending a lot of time as a tax administration just figuring out where exactly they are cheating, which is an extremely complicated way of trying to build a country. Like, if people just want to cheat, or they think cheating is a good idea, then it will be extremely difficult to build a country like that. I mean, people have to believe that paying taxes is important. Otherwise, you cannot do it. I would always say, look, the game cannot, the way this has to be done, it has to be that people want to comply. No, and of course you will find sometimes someone who wants to cheat, but if everybody thinks that they are supposed to cheat and the tax administration is supposed to catch them, then it is a terrible situation. Then you might think after telling this horror story of VAT and personal and corporate income tax, I couldn't possibly say something is worse. Well, there are worse things, wealth taxes. Wealth taxes are almost impossible to do well. The only one you can do well are land taxes, building taxes, registered asset taxes. So think about your house, think about your car. If you have a house, if you have a car, then it is more or less easy for me as a state to try to charge taxes on you on them, right? I might have a hard time as a state figuring out how much your house is worth, but at least I know you have a house, I know where is it, and I can try to tax it. But if I try to implement a wealth tax on liquid financial assets, it is extremely easy for people to move financial assets to a jurisdiction that doesn't force them to pay taxes. So this is where you can see that authors like Piketty, when they promote wealth taxes, they always say, look, it has to be a worldwide tax chain. It cannot be done by a single country, because if only one country does it, then wealthy people will just move their financial income out of that country. So yes, in theory, we should really have wealth taxes, but in practice, it is super difficult to do it unless we fix the entire financial system worldwide and make it much clearer where do people have to pay and why. And finally, again, as mentioned before, sin tax are very good for solving negative externality, such as the medical cost of smokers or the cleanup of polluting industry. But again, it is not wise to use sin tax as the base of the tax system. The base of the tax system will always be income tax and VAT. And my dream would be an also wealth tax, but that much harder. And what is a typical story you will hear when you propose raising taxes? The first reaction is always, I don't want any new taxes. Please make people pay the taxes that already exist. So when people are not paying the taxes that already exist, this is called the tax gap. And it is very slow to close the tax gap. And you can see here in Albania, a 20% reduction in tax expenditure and a 16% reduction in tax evasion would yield about 1% of GDP each. So you might say, why don't we do exactly that? So the funny thing about, and in my personal experience working at the Ministry of Finance, is that people are not saying the truth when they say, please charge the tax that already exists. Because for instance, tax expenditure are basically exemption to pay a tax. And I can imagine the following situation. We are all right now thinking about climate change, and we think we should encourage green technology, so we should really make a tax exemption for green technologies. And so you say, you know what, green car, electric cars or something like that shouldn't pay taxes. And so that a tax expenditure, that a special tax treatment, maybe in 10 years, all the cars are electric cars. So you might say, well, right now I don't need to encourage electric cars anymore. but now you have a huge problem. People got used to not paying taxes on cars, and you say, well, I need to take this tax exemption out. I don't need this tax exemption anymore. People will say, no, wait a minute, you are changing my tax. You are putting a new tax in my electric car. And I'm going to be like, no, no, no. The idea was that everybody was supposed to pay taxes on cars. And we just made a brief exemption. But unfortunately, brief exemption become forever exemption because people then politically never want the exemption to be removed. So I'm warning you that this story of no new taxes become a story of don't change the tax system. And a similar situation happened with tax evasion. One of my favorite examples, again in Costa Rica, was the one time that, so you know, like there was the very high tax rate on land, but people would declare extremely low values on their land. So they would have a huge farm and they would claim it was like really $1 or $10 or I don't know, $100, but you know, a huge farm worth nothing. And so it so they would pay very little taxes, and even if the tax rate was high. And the interesting thing is that the government of Costa Rica developed a very good land taxation estimation. And so they realized they got much closer to the real value of property. So suddenly a farm that was valued $100 now was worth, I don't know, $150,000 because it was a large farm. So now, even if the tax was very, very reasonable, now it was not possible to pay for it because after many years, people were actually paying what they were supposed to always pay. And it is interesting because it was not a new tax. It was basically a reduction in tax evasion. And then people reacted extremely strongly. You know, like farmers had huge, how do you call it, like huge protest, and Congress had to change the tax. And for me, it has been a fascinating story forever because I said, wait a minute, we did what was supposed to be done. You know, like there was a tax, and we began making people pay the tax that was in the law and at the rate that was supposed to be paid. And then people say, no, no, now we want a lower tax rate. So you have to also be careful about how easy will it be to reduce tax evasion, because when you do it, sometimes you realize you have upset social equilibrium. As I like to say, basically there was a weird equilibrium where people would basically say, yeah, we know the tax rate is high, but then we will lie about the tax base. But then when they were not able to lie about the tax rate, then they weren't able to pay at that rate. They wanted a lower rate. Now we are in a much healthier situation. We have a lower tax rate, but the tax base is real and everything is much more fair. Because of course, in the past, whoever was paying the real value of the land, then they would be very angry at all the cheaters. Now there are much fewer cheaters. So yeah, but the rate is also lower. So in the end, maybe one key question here is, if you really want to reduce tax evasion, first make sure that society is ready for that, and so that you don't have a situation like we had. Second, be careful that the system is not unfair, like that maybe you reduce tax evasion, but the tax effort is going to be very focused on those that don't have the means to avoid the tax. So maybe wealthy people have good lawyer, good accountant, they continue avoiding the tax. And poorer people have no lawyer, no accountant, and they end up paying the full tax. So you have to be a bit careful that the tax system is well designed. So again, Why is it difficult to raise taxes? Tax evasion, tax avoidance, tax exemption, inequitable rent sharing when it is natural resource exploitation, lack of administrative capacity, corruption. There are international issues often. So here we have good news. There used to be a lot of tax competition to attract foreign investment, and there were a lot of problems with the value chain of multinational corporations. They could play very easily gain with transfer pricing. So in the last few years, there have been big improvement in price transfer regulation, in minimum corporate taxes this year. There have been new changes, and also, for example, in tax exchange arrangement, tax information exchange arrangement. So now countries are exchanging much more information than before. So the multinational corporations don't claim one thing in one country and a different thing in another country. They have to claim the same because countries might cross information. And then, of course, raising taxes is difficult if you require aid to build capacity, and also sometimes if you raise taxes, for example, in wealth, and then wealthy people take out the money from the country, then you can have an exchange rate situation. And for a very weak economy, this can be a real issue. What are good practices in taxation? Definitely, if there is a strong political will, build administration in a way that reduce rent seeking and inappropriate behavior. This is, of course, much easier to say than to do, but modern advances in automation allow people to, build systems that are less prone to corruption, that have a more straightforward process from the moment people declare, the moment people pay, to have traceability of what kind of changes or dispute there may be between the administration and the people, the taxpayer. And this concept of the taxpayer, you really need law to protect the taxpayer. So you might say, wait a minute, but I'm trying to get more revenue, more taxes. Why am I going to protect the taxpayer? Well, again, if the taxpayer feels protected, then they will disclose the real income they have. They will pay the real amount they have to pay. They will not fear arbitrary or corrupt measures from the administration. So I'm afraid, at least in my experience, even good taxpayers would become very reluctant to disclose information because then they would be abused by corrupt public employees. So when you have strong taxpayer protection of their privacy, for example, it makes a big difference. I also remember, for instance, there would be big, what I would call like industrial secret cell, like a public employee of the tax administration will get the information, the tax information of a company, and sell it to the competitors, right? So there will be a disclosure of how do you call it, like corporate secret. And this kind of behavior, again, if there is not taxpayer protection, then evasion and the reluctance to disclose reality will be very high. Then again, we were saying tax expenditure and exemption have to be eliminated as much as possible if there is no clear public purpose, no concession to multinational corporations. And here I highlighted in black one of the most important ones for this context, to what we are discussing today. We are thinking of all revenue, not only taxes. And for an informal enterprise, the the complexity of paying for everything, both taxes and social security, can become very high. So you need a coherent, the whole system, high coherent across the entire system. Not only the taxes are coherent, but only that they are coherent with social security. Otherwise, you might end up with small firm having extremely heavy workload to pay both taxes and social security, and also a very high part of their income will go to social security and taxes, and they will not be able to grow and create employment or to even exist. We can discuss that a bit more when I end. So then again, the personal income tax rate should be as global as possible, which should make sure that there is tax withholding for businesses and tax deduction in payroll. So at the beginning, I have to confess, if you had asked me 12 years ago, I would have been much more suspicious about this particular one, but it turned out it worked very well. Like, it really makes a difference to withhold taxes at certain point of the value chain, as opposed to waiting until people declare at the end of the year and that they pay at the end of the year. So it's kind of surprising it makes such a big difference, but it does. So it is more of a practical than a theoretical difference. And then, so if you are going to implement a VAT, do it as a very broad one, and hopefully with measure, possibly income measure that offset its regressivity. And then there are the sin taxes again, because it addresses wider social concern. So what are the big PFM logic connection with improving tax collection? Well, of course, efficiency, in the sense of if you have a good PFM system, a good public finance management system, you have good economic modeling, so you can figure out whether new taxes are going to affect your resource allocation, how much extra resources are going to achieve by putting one tax or this other tax, so you can make all those comparisons. I have always been a big fan, for example, of the CBO, the Congressional Budget Office of the United States. They have an excellent economic modeling, and whenever a new tax or new tax change is proposed, they always can tell you, of course, without, it is not perfection, but they have a pretty good sense of what is going to be the impact of a given tax. And again, in the same logic, if you have good economic modeling, if you have good data set, you can also figure out what is the distributional impact of the tax. If you don't have good data set, then you should try to think of all these issues at least a bit carefully. Is this tax going to generate a big distortion? Is this tax going to generate a big inequality distribution? So you have to think about that carefully if you don't have the data. Tax reform should typically try to encourage compliance by making it very easy to comply. If you create a tax reform that is super difficult to pay, then don't complain later when people don't want to pay, right? Because it is very often not so much that they don't want to pay, but that they find it so onerous, so difficult to go through the process that they say, you know what, I will not pay it, and let's wait until the tax inspector comes to look for me. And as you can imagine, tax inspector never have time to go look for people. So it is better just to encourage compliance. Then again, this is very close to the final point, the administrative feasibility. Is your tax administration able to address the changes in the tax code? Sometimes a change in the tax code is very complicated to manage. Sometimes it was better to have a less technically perfect tax, but easier to manage. So again, corruption is always going to be a big issue, but there is no good. And in my experience, the strongest area of corruption, at least of active corruption, has been in the tariff part. Not so much strongly in the income part, but it was sort of second level, like second order. But I was always surprised at how corrupt is the tarification part. There are countries that with big effort in administrative change can make significant improvement in their tax collection, such as the Philippines, that double their annual tax collection. Then there is the elasticity concern. The elasticity concern, to be brief about it, is essentially the notion that whenever you see a tax increase, it will often increase the price. If you were buying bread and the bread is now more expensive, then you probably buy less than before. So if you are buying less bread, then even if there was a tax increase, the tax revenues are going not to be so much. Why? Because people are buying less bread. So elasticity is extremely important to at least try to understand when you are trying to get more tax revenue by increasing taxes. And again, I have mentioned the special case of wealth, that most wealth is very elastic, financial wealth, and they will be able to move their wealth if you try to tax it. And so that's why almost all wealth taxes are on land or on car or on things that are not easy to just get rid of or to move. So this is frustrating if you really want to be fair and charge more taxes on wealthier people. But you have to be realistic and say, well, it is not so easy to charge a lot of money to wealthy people who can just, shift that money to another country. And again, this tax elasticity is not necessarily a concept of evasion. So many times it is just a change in behavior. So if you are buying less bread, it is not that you are avoiding taxes. It is just the bread is more expensive. You don't want to buy so much anymore. So tax is less, but you were not trying to evade taxes. And elasticity is hard to estimate well. Academics use very advanced technique, especially trying to use kink or notch, but for most practical purposes, it is sufficient to try to make some much reasonable assumption of how much is the elasticity going to reduce expected tax revenues. Then we have Social Security, which I will discuss quickly. Social Security should not be considered a tax. It should be considered mainly a deferred wage. And a well-designed social protection system can be good for economic growth and redistribute income. So basically the argument I want to do today is, look, a lot of people try to say, please don't do a lot of social security contribution because that's going to increase informality and unemployment because it is raising labor cost. And there is an alternative interpretation of this. Informality and unemployment are actually sort of internal to countries. They are not so closely related to social security. Actually, when you think carefully about social security, it is not really a labor cost or tax cost. It is a deferred wage. Why is this so important? I like to tell a simple story to explain this. Think of a basket of food. let's say you earn $100 per week, and one day your employer say, we got a good deal on food, and we will deduct $10 in exchange for a basket of food every week. If at the end of the week they give you a basket that is valued only $5, you will get really angry. You will say, wait a minute, I'm getting $90 and a basket of $5. You actually cut my wage from 100 to 95. I'm very angry, I want more money. But if at the end of the week you were given a basket that is much more valuable than $10, for instance, let's say it is $30, then your situation has improved a lot. You now have $90 in cash plus a basket of food of $30. So your gross wage is $120. You are doing much better now. If you are doing so much better now, you and not the other employees, then actually employment might increase. People get more interest in working for this condition because the gross wage has increased. And again, if we, of course, this example of the basket of food is social protection. And here is where the credibility of the promised benefit is critical. If the credibility is very low, then it is like the basket of food. If credibility is very high, it is like the gold basket of food. I mean, imagine when they deduct a little bit of your income, but you are promised a pension, you are promised unemployment insurance, you are promised maternity leave, you are promised child benefit, you are promised healthcare, then you might start saying, no, wait a minute, this is a good deal. I'm willing to work for this. But if you say, I'm paying all this money and I'm not going to get a pension, when I go to the hospital, I don't receive attention, my unemployment insurance is non-existent, so then it makes sense that people will perceive paying for a social security contribution like a tax. Right, so here you can see that as opposed to pure taxes, in social security contribution, there is this notion of the credibility making a big difference for the purposes of the labor market. Besides that argument, you also can have this other argument of social security as a stabilizer. If there is a big crisis, and we all saw this with COVID, countries that already have good unemployment insurance structure had a much better reaction to the unemployment of COVID. And countries that didn't have it, they had to struggle building ad hoc program to be able to help people who were unemployed due to COVID. And again, COVID was a special case, but all the time, and you can see it in this list, you can imagine many, many ways of suddenly becoming very vulnerable and unable to receive labor income, right? And this is the critical point. You want to work, but you have a situation that doesn't allow you to work. And besides those examples, there are examples like child benefit that when they improve nutrition and health in children, they create more productive adults. If you don't care much about social protection as a human right issue, and you should, but let's say you don't, and you only care of it as an economic issue, then you can always say this, right? Like, okay, child benefits are good because they will be more productive adults in the future. So what are the three big ways you can build fiscal base in Social Security? Extending legal coverage, because very often in a given country, the legal coverage of Social Security might not reach all groups. So sometimes you may just extend it. And this is especially important to extend it to workers in informal economy. Even if you already expand the legal coverage, you have to consider expanding effective coverage. Some groups have already legal access to Social Security, but for some reason they are not contributing yet. So you have to start the process of formalization policy that encourage enterprises to start providing paying for Social Security. And finally, sometimes when you are starting, the system contribution rates are still very low, sometimes because the country is very young, and usually younger countries on average have fewer social security payment, so they can start with low contribution, but at some point they have to increase the contribution rate, but they can do it gradually, and we saw with Europe, they took 70 years to increase it to the mature level. So this is to get a sense of the time frame we are discussing. It is very important to take into account the role of institutional structure in the example of Albania, which Helmut had been discussing. As you can see, Albania is a country with a very strong social security tradition. So if you look at the graph in the right, it has much higher revenue value than the graph on the left. Like changing things in social insurance will create 2% of GDP, 4% of GDP, and in taxation, you are talking only about 0.2, 0.4, like a fifth of what they do in the other. So this is a sense in which different countries might, depending on their own tradition of how to receive revenue, they might find it easier to increase resources from taxation or to increase resources from social insurance for the purpose of paying for social protection. So, to end the presentation and to create a small page of question and answer, the challenge of informality. Even if we are in the positive elasticity scenario I was discussing earlier of social security actually encouraging more employment because people believe in social security, believe in the benefit they are going to receive, and actually the labor market become more formal when you expand social security. Even if you believe that this could happen, there are many cases that encourage people to remain in the informal sector. And in particular, we are all worried that the informal sector has been much more persistent in middle-income countries than the historical experience of Europe, which I think is very closely related to one of the questions I got earlier. By the time Germany or France had the relative income that Latin America currently has, they were much more formal than Latin America is today. So authors like Danny Roderick have attributed to what they call premature deindustrialization. They say that manufacturing was an extremely important process to get social protection. Like when people move from agriculture to manufacturing and you had the big industrial system, it was much easier to get people into social protection. And then Europe moved to services, but it already had a strong tradition of social protection. Instead now, this premature deindustrialization is that you are not moving through a manufacturing station. You just go straight from agriculture to services. And when you do that, there is no build-up of institutions that allow you to have a good social protection. So, 3 questions. 1, what do you think are the causes of high informality in middle-income countries? Is it different from low-income countries in your experience? 2, are high-income countries at risk of increased informality as gig economy platforms become more common? Like the discussion with Uber or Amazon or all those platforms. And 3, how can the world face this challenge together? So I will stop here. Thank you very much. I will keep the presentation open. Any volunteers on for the question? Oh, okay, sorry. I didn't see until now. Sorry. Aristide had. I will give you the floor, but in one second. Aristide had asked whether sin tax include excise tax. Yes, sin taxes are excise taxes. Thank you, Aristide. Go ahead, Patient.
Oh, thanks, Alvaro, and thank you for the comprehensive presentation. I just wanted to say maybe I could add a few issues arising from experience, I think, in terms of the first question. I think one of the issues, I think, it's basically the level of, one, it starts from the level of economic development in these countries and also the tech sectors that are really well developed. And the other issue relates to the capacity, I think, of these economies and these countries to provide those incentives that try to promote people that are in the informal economy to, to get to want to be formalized. There are issues around creating an enabling business environment for these businesses to grow, which in some cases are a challenge. In some countries, I give an example of Zambia, like even the single incentive of having to provide for a facility like a credit facility where these small scale businesses or the people that are working in the informal economy can go so that they are able to grow their business, and then along the way in the medium to long term they can begin to graduate to a level where they get formalized and they register. You find that those are a bit difficult, not easily found. And also, I think the issue of, for lack of a better word, let me say inspection, but not that inspection to enforce. Yes, but some kind of following up, programs that first create a level of awareness to also contribute to the incentivization of formalizing. Because, I mean, these businesses, sometimes they don't even know there are certain business development services that exist. Some of them do not know, others know, but they are not able to access them. So those are some of the challenges I think that have contributed. And I think maybe even in low income countries where there is no deliberate maybe move even to ensure that whatever is happening in the growth sectors, economic sectors, like could be linked or be leveraged on to ensure that there's that promotion of building of capacity and businesses for the other sectors, the other people that are working in the informal economy. Yeah, so maybe I can end there. Thank you.
No, wonderful. I agree fully. Indeed, for me, one of the key problems is this. I mean, it is not a problem per se, but it has been becoming a problem for this situation we are discussing, which is the very strong encouragement of, okay, you are informal, continue growing a little bit in informality. And at least the experience in Latin America, which I seem very similar to what you just described in Zambia, is that you allow informal firms to continue in informality, they grow a little bit more, and then at some point they're frozen and they don't really know how to shift to formality, and there might even be a lot of technical assistance to move to formality, but in the end, they are regional people and they will make the cost benefit of becoming formal, and sometimes it doesn't really work. I really like a paper on Mexico about this, and they estimated the cost of moving from informality to formality when you have already grown, and it was up to 25% of cost, which is an incredible amount. I mean, think of what typically a firm earns, maybe 10% on net income. So a 25% increase in cost basically kills the firm. So that's why a lot of firms end up trapped in informality forever, because they don't really have the cost structure to survive moving to formality. And so you have a lot of people trapped into low productivity area. Yes, I have been very worried about the development, because now that we have so many people trapped here, forcing them into formality hard. You mentioned having more inspectors. So in Mexico, when they made the estimate, okay, let's try to force all these people to move to formality. Their estimate was that 60% of the firm would die. They wouldn't be able to survive formality. There would be 40% that could survive formality. But then what do you do with the 60% that all their employees have to be fired? I mean, they won't have jobs, and all those services will disappear. So, there has to be, you have to be very careful about whether there is some sort of political equilibrium where inspectors are told, please don't go to closed firm, because although people are going to be unemployed and we are all going to have political problems, right? And of course, there is the economic problem of people being unemployed because the place where they were working is now closed, right? So yeah, it is a big issue. So thank you very much, Paige. Any other comment? Yes, go ahead, Munya.
Yes, Alvaro. I was thinking of just following up on Patience's submission, but also your explanation. And I wanted to play devil's advocate a little bit, and maybe
Go ahead.
just try to look at the practicality, really, because I know that we have been discussing on the importance of formalization in line with making businesses grow, in line with enabling capacity of businesses to make contributions for social security, and all the other things that go with formalization. So I'm just thinking, and I think you also made mention of this. I'm thinking of the practicality. If we look, for example, in developing countries right now, we know that a large proportion of labor is really involved in informal activities. So when we look at the practicality, we look at really the cost of formalization. Do we expect that everybody is going to move from the informal to the formal? Personally, I don't think that is practical. And I think one of the challenges that we face is really on convincing, building a case that when you go to speak to somebody who's really in that situation, they'll be able to buy into the business case for formalization. So for me, I really find it a bit, I struggle, just to be honest, on how we can really convince the small micro businesses to do this shift to formalization, looking at the costs that they would incur. Like, how do we really do it from a practical point of view? I think one of the issues would be, to put more stress on the incentives. Patience mentioned this. How do we incentivize? How do we build a case to say, if you do A, B, C, D, the returns on your business will be, E, F, G, and we try to build on that. So I think for me, that's one of the issues I struggle with, to be more practical, move from the theory and just be more practical. So I thought I could just make that contribution. Over.
No, that was a wonderful contribution. Thank you very much, Munya. I agree fully with what you say. I try to be optimistic that if you create a credible system of pensions, of unemployment insurance, and so on and so forth, people will be encouraged to participate in the social security system, but the reality is that many of them are just trying to survive. So they will say, yeah, I believe you that you will give me a pension 40 years from now, but right now I need enough to eat, right? So you have the weird, complicated situation where the dynamic are extremely complex. And for me, I have been, I also have struggled a lot of with this issue because, for example, when you look at productivity, because in the end, all this is about productivity. I know we like to talk about human rights and everything, but if you really want to pay for a social security system, you need productivity. And the problem is, um, informal sector begin becoming, like, according to the Mexico paper, at least the Mexico experience, the informal area become like this repository of unproductive firms that they are able to continue functioning as long as they don't pay the full cost of formalization. But in theory, many of those firms where, like, people have the impression that they are doing great because they are their own bosses or they have their own time or whatever, they actually should be employees in a big firm. So, because in a big firm, big formal firm, they will actually be more productive and they will actually pay for social protection. So this kind of change in mindset is going to be extremely difficult to achieve because I have the feeling that we sort of celebrate this kind of small, firm mindset of survival as opposed of entrepreneurship. So one thing is, I'm an entrepreneur. I want to do the next Apple or the next Microsoft or the next Walmart or whatever. I'm going to start small, but I'm going to become huge someday. But because I actually have a process where I have capital, I have the knowledge of the market, the technical knowledge, I can do this as opposed to, like, I'm not getting a job in the formal sector, so I'm just going to start my own firm in whatever I can find so that I can survive. So, the whole unproductive survival issue create a bit of a chicken and egg situation. I mentioned it, for instance, unemployment insurance should be very focused on getting employees that lost their job find a good match again. But in countries that don't have an unemployment insurance a lot at all, then many employees lose their job and they immediately start some little small business, and then they start losing a lot of money because they didn't start the business out of an entrepreneurship drive, but out of a necessity, an immediate need for more money, right? So I have been very concerned how you get out of these kind of traps, but yeah, it is not easy. But I wanted to set all of you into thinking that these things are difficult, that the big structure that sustain social security are taxation and social security contribution are expensive. And yes, you can try to do, for instance, more social assistance from the state, and you can try to do things like, pledging with the intergenerational advantage of very young countries in the case of countries that are still very young. But even so, you still will face the big wall of pure productivity. And I'm not sure how you fix this. That's why I have been reading closely discussion like the premature deindustrialization and other explanation people have been trying to think of why it is getting so difficult to formalize firm. And I'm a big believer on the industrial story. And yes, I don't know, you might have your own story to think of, but yeah, it is going to be difficult. And I'm worried also, which is the final question I made in the slide, how can the world face the challenge together if even advanced countries are starting to backtrack in social protection? You have this gig economy structure where Amazon or like Facebook people and that sort of thing that don't have like the very clear employer relationship, and that starting to affect advanced countries too. Like I'm kind of surprised. Well, I'm now living here in Geneva and I exist here and in France too, and I'm thinking, well, will the system be able to sustain a lot of people who are in also gig economy? I'm not sure. So yeah, I think it is a big challenge, and I would love it if you can give me feedback. We are a bit over time, but if anyone wants to make a final comment, happy to hear you. Okay, well, so thank you so much, Philip. If you want to write to me, happy to hear from you too. Again, next Wednesday, we have the final session with Helmut. So I'll see you next Wednesday, but it won't be me presenting. So it was a pleasure. I hope you found it useful to join me the 90 minutes and 10. So thank you very much. Have a great evening. Bye-bye.
Thank you.
Thank you. Have a great
you.
evening too.
Thank you, everybody. Have a nice
Bye.
evening.
Bye.
Thank you, Alvaro. Thank you,
Thank you.
everybody. Bye.
Bye.
Bye-bye.
Bye.